The SIP inflows, which had managed to cross that 17,000 crore mark for the first time ever, that's the November data highlighting the same. Let's take that conversation forward. We have with us MD and CEO at Mahindra Manulife Investment joining in right now. We've got Anthony Heredia on the show. Anthony, hi. Great to have you today on ET Now. While it comes as no surprise that the SIP inflows are at an all-time high, but is there any bifurcation here? Are the inflows more skewed towards mid and small caps as opposed to large cap schemes?
Hi, good afternoon. No, I don't think the SIP flows would be skewed. To some degree, you would argue that lump sums tend to have been in small and mid-cap funds over the last 6 months. But I think SIPs are built over a period of time, right? So I think SIP flows would be much more evenly distributed between multi-cap, flexi-cap, as well as small and mid-cap. I would admit, though, that I would say the proportion of new SIPs being opened in small and mid caps in the last 6 months have been higher. And that's no surprise, like I said, because lump sum investors have looked at small and mid caps given recent returns. But again, we're seeing that trend change a bit in the last month or two. I think flexi and multi cap funds seem to be much more things that investors are looking at.
There's a bit of a shift that you're already witnessing. There is a focus coming back to the large cap category as well. But what's your sense in terms of how overall momentum is on the ground? Do you think there's some sort of caution which is needed in the markets right now for retail investors? Or do you think the 17,000 is likely to become 18, 20,000 crore soon?
So I can't comment on how soon, but I'm pretty sure it will be 20,000 in the next 6 to 9 months. That's given the perspective that most clients understand that SIP is a great form of saving, translating into investments. I think caution I would advise to investors who are having timeframes which are lesser than 2 years. To my mind, investing in equity, irrespective of your valuation view, makes sense when you have a time frame of 5 years and more. If you have a time frame of 5 years and more, I think the need for caution is much lesser. If you have a time frame of 18 to 24 months, then I certainly would tell people you need to be cautious and think very deeply about where you're investing.
The other thing I also wanted to, talk about is some of the sectoral and thematic funds, right? Because we've seen how the street has been so charged up about the entire PSU theme. Individual, sectors like banks, of course, continue to find favor, and they're also pegged as the sector for the next 6 to 12 months. Any specific observation that you've made?
So I think the observation I would have is the following. I think the biggest premise around investing in equity in the long term in India is just the dramatic change in our economy that's going to take place over the next 5 to 7 years, right? There's conversations around becoming the third largest economy, conversations around per capita moving from $2,500 to $5,000. And then the natural next question is, if that happens, where are the next set of opportunities going to come from? And then trying to put that format in terms of themes that will play out more than the average market, etc., then become translated into NFOs of thematic funds that people get more excited about. That's just the nature of how retail investors sometimes play it. Diversification sometimes is too boring, but actually it makes more money in the long term. I think the thematic fund flows that you're seeing is a reflection of the broader theme. Where is India going to be economic terms in the next 5 or 7 years? What's the opportunity set going to be because of that? PSU is one of them, manufacturing is another, just the sheer amount of innovation and disruption. So therefore, themes that play on that. So I think it's a reflection of that broader outlook on the economy.
Anthony, before I let you go, a leaf out of what the RBI governor said today. Of course, the overall, e-mandates for UPI, etc., have been increased for mutual fund investments as well to 1 lakh rupees. Do you think that would be a major fillip as well?
I don't expect it to be. It's just another convenient form of investing into funds. But at the risk of sounding like I'm batting for the industry, I think the paperless format by which you can digitally invest in our industry is already pretty vast. But obviously, the fact that you can now do UPI up to 1 lakh effectively means that theoretically people who are doing larger SIPs perhaps look at a UPI route as opposed to the e-mandate route. But I would say this, that between the current digital payment options that are available for clients to buy SIPs or lump sums into funds, this is another addition that makes it more convenient, but I don't think it's a significant change to how flows will be.
Anthony, great to have you with all that insight. Good speaking with you.